Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. This market still stands in a tight consolidation, and it seems that investors just waiting when this week will over. Just to think about the recent information that we have. Currently, there's a lot of noise in the net about the explosive short-term deposit rate hike in the repo market in the United States, when the rates on the overnight has risen to 10%, and it was a really unprecedented event that makes a lot of noise right now among the bankers, and many people start to talk about some really awful events. This is the end. This is something problem. Fed has problem with liquidity and so on. But guys, actually, to be honest, this situation has relation only to the short-term liquidity. When I'm working in bank dealing, we saw the rates even 20 and 40% in the morning, but they had dropped 3-4 times to the lunchtime, and that is normal because actually the major risk factor of that is the uncertainty of the client payments. So if in these days will be some obligation payments, such as taxes or something on such sort, especially when the companies have to pay some import-export contracts, this makes impact on the liquidity. And the reason for this collapse that has happened 2 days ago is just the greedy of the commercial banks. So they put all the liquidities from their current accounts into treasuries to trying to get some return on this money. They just keep too small amount of the current accounts to provide the liquidity for the payments, client payments. And when this problem has become global in the U.S. banking sector, when there are even big whales have got the problems with the liquidity, the Fed step in and provide liquidity, get the repos on treasuries from the big whales, Fargo, JP Morgan, Citi, and other banks. And gradually this liquidity dropped back down to smaller banks. This is actually, in 2 words, what really has happened. So I think that this is not really some strategy or some uncommon thing. The problem is that just United States banks is too habit with the low rates. So they think that rates always was low and that it should be low. But in other countries, especially in emerging markets, this is more an exception rather than a common thing that rate stands too low. So, and the spikes on the overnight rates could be not just 10%, as I said, but significantly higher. And this is not something really outstanding. This is common thing. So I think that all this noise is a bit overestimated around this problem. I do not see something really special with all this stuff. Now let's return back to the euro. So on the euro, from the technical point of view, guys, although we do not see much action, euro shows more bullish signs currently, and it seems that some upward breakout here is more probable than downward reversal. Why we think so? First of all, take a look at markets still keep this consolidation below the major confidence. Usually, how bearish market develops, it shows collapse, retracement to the strong level, and downward continuation. But we do not see that. Market is testing this level since the end of August. So it's almost 3 weeks in a row. Market is challenging this 110.50 area, and doesn't step out from it. So it just shows the consolidation below the major confidence. This is the price behavior that brings some hazard to the bearish market. So because it's not typically bearish, this price action. Here is also, you can see, a bit steeper upward action compared to this one. So if we will eliminate, do not take into consideration this emotional spike on data release, you could see that this V-shaped support lines and this right side of this becomes steeper. So it means that market creates higher lows, but the tendency here is more steeper than this one. So next low is higher than this one compared to this trend. It's also the bullish sign. Besides, market stands above 110 area that we have specified as a crucial level for the bulls, and stands here pretty nice. Although we will get the major direction only on the breakout, either 109 or this top around 111, but this will be already the development of the next longer term tendency that we will get on the daily chart, on the weekly. But currently, based on the price behavior that we see here, it seems that the chances on the breakout and challenge of this resistance again are greater than bearish reversal. Besides, if you'll take a look at the dollar index, you can see that this break holds stands here of this consolidation, and this spike on the dollar index looks different compared to euro. In the euro, we see that's approximately equals to this top, but on the dollar index, this is some kind of the great wash and rinse. And this hanging break of candles on the market indicates that it seems that more chances on the downward breakout, because here you do not see some attempt of upward continuation. Market just grabs stops above this area and returns back down, stands flat and accelerating lower. So that's what really could happen. This is December contract futures on futures on the dollar index. So do not pay attention to this gap. That's just changing of the futures contract from September to December. Well, that's what we see right now. On the intraday chart, speaking on targets, we have actually the same. ABCD COP 111. It still stands valid. And to the upside, you could imagine a lot of different patterns. So here you could imagine the butterflies we have discussed. Yes, this could become left wing, right wing. This could proceed higher. Also, you could take into consideration this A, B, C bottom, D pattern that we also discussed yesterday. This also leads us to 111. So 111 is the nearest target. Speaking on the more detailed price behavior on the 4-hour time frame chart, here, guys, we could recognize maybe not the shape, but something common to head and shoulders. So you could, this is a kind of the left arm, head, and this could become the kind of the right arm. Here, market also has formed the bullish reversal swing up, shows the 618 retracement. That is classical behavior for a bullish market, turning up again. Yesterday, you can see market here turns up prior reaching of the trend support. That's also bullish sign. So currently, guys, we do not have any bearish context, and bears should sit on the hands and wait when the market will break at least 110 area. That's the signal line for the bears. If market turns down, somehow surprisingly break this level to the downside, that would be something to think about for the bears. Until this will happen, context still bullish. MACD trend stands bullish on the daily chart. Price behavior also shows more bullish signs rather than bearish. Finally, on the hourly chart, you consider repeating of the same pattern. So yesterday we talked about got people to buy, and we said you could try and take the long position here with this pattern, since this also was the 618 support. This day situation repeats the same pattern, not quite the 222, because take a look, this low stands above that one. But in general, the price behavior very similar to what we saw yesterday. It's again 618 support, market again turning up. So you can see that market forms the sequence of the higher lows, with keeping this top flat. This is indication of the bullish pressure, and it means that market is building an energy, trying to challenge and break this resistance. So that's our opinion on the euro currency, and let's see whether the market will be able today to show this breakout, or we'll keep watching them on the next week.